teachers. So today we are going to learn about the manufacturing account. Manufacturing account as compared to the retailer business is quite different. Under retail business you're selling out, but in this business actually you're producing the product. So when we are producing the product, we are going to divide the whole process into 3 stages. We get the raw material and we process the raw material with the help of the machine, with the help of the workers, and finally we get the finished goods. So whatever we are going to pay to produce the product, we say as cost. So elements of cost under manufacturing business are 2. One is that the direct cost, another is the indirect cost. Direct cost is the prime cost. Prime cost is further classification are 3. Like whenever we talk about the prime cost, we basically talk about the 3 important things: direct material, direct labor, and direct cost or direct expenses. Direct material, how much you have the raw material you have consumed out. Direct labor is that who actually responsible to produce the product. When we talk about the furniture, so we need the carpenter. So whoever is directly involved to produce the product, we say as direct labor. Then we have talking about the direct expense. Direct expenses is that if we are going to use the specific design in production of the furniture, so whatever we pay the designer cost, it is our direct expense. So other examples of the direct expenses are patent, royalties, and all. Then we talk about the indirect costs. Indirect cost is, the another name is factory overhead. So factory overhead also having the same 3 things, but here we're talking about indirect material, indirect labor, and indirect expenses. Indirect material is that how much the material you have consumed out, okay, to produce 1 unit. So when we talk about the furniture, we cannot tell that how much we have used the glue, how much we have used the nails, how much we have used the screws to produce it. So all these costs which we are unable to calculate, we normally count as a whole. That's called as the indirect material. When we go for the production, we also need the supervisors and the managers to keep the standard high, or at least to keep the standard. So all these salaries and wages, whatever we pay to the supervisors, called as or coming under as indirect labor. Indirect expenses are what, like how much the electricity you have used it for production of 1 unit. It's really hard when we're going to count it, because the electricity you're going to use for production of other items as well. So when we are harder to utilize or harder to know about it, that how much we have used the indirect expenses, like the rental, how much you paid out for 1 unit. And normally what we do it, we take the total rental, we take the total electricity bill, and how many units we produce it, and then whatever the outcome, meaning total cost divided by number of units produced, the unit per cost is actually we're going to talk for the indirect expense for that particular product. So when we saying about the production cost, so production cost is consisted of these 2 important things: the prime cost and the factory overhead. It makes as the production cost. Sometimes, okay, or when the business is going well, okay, so it's not sure, okay, at the end of the day all the units are processed. Some items are still in process. So all these in process items we see as work in progress or work in process. So right after this we should understand about the manufacturing account, because we are calculating the cost and all. So I told you earlier that the prime cost is having the direct material, direct labor, and direct expenses. So you can see here, this is your direct material. So direct material is having the context exactly same as your trading consent, but here the concept we are using for raw material. So opening inventory of raw material plus purchases of raw material, carriage inverse, whatever you pay for transportation cost, all this together we are going to add together, and this amount we get as direct material available for use. Then how much we have used it. So easier method is what we whatever is the closing inventory, we are going to subtract it. If we subtract this one, the answer will come as direct material consumed. Then second segment under the prime cost is that direct labor and direct expenses like royalty. So if we add these three together, and what we get here as prime cost. So after that, factory overhead. So factory overhead, I told earlier that all the indirect expenses. So indirect expenses, factory rent, factory insurance, factory supervisor salaries, depreciation of machinery and equipment. All this we record straight away here, and then we add together. This will be our total factory overhead. So total factory overhead and your prime cost added together. So whatever we get here is actually cost of goods manufactured. So whatever the items were at the start of the year have not processed yet, we say as work in process opening inventory, and that amount we are going to add, and the closing inventory we are going to subtract for work in progress. So the amount whatever will come out, it is your production cost. This production cost, the outcome of your manufacturing cost or manufacturing account. Right after that, we also need to know about it, that whether the business earned the profit or the loss. So all this loss and profit calculation we're doing in the income statement. You know very well, whenever we prepare the income statement, there should be as the business name, then the income statement as title, and income statement is a periodical document.